Hey everyone, Prem here. Buying your first home? It can seem daunting, right? Like this massive, complicated thing with a million steps. Trust me, I get it. But it doesn't have to be that way. In this video, we're breaking down the entire process into simple, easy-to-understand steps. We'll walk you through everything, from figuring out your budget to finally getting those keys in your hand. No confusing jargon, no pressure, just straightforward advice to help you achieve your dream of homeownership. Stick around because by the end of this video, you'll feel way more confident and prepared to take that exciting leap into homeownership. Alright, let's be real, the first thing you need to know before even thinking about browsing houses is this. How much house can you actually afford? This is the foundation of your home buying journey, and getting it right is crucial. And I don't just mean what the bank will lend you. I mean what can you comfortably afford without stretching yourself thin? It's about finding that sweet spot where you can enjoy your new home without financial stress. Now, a good rule of thumb is the 50/30/20 rule. This simple guideline can help you allocate your income wisely. This means 50% of your after-tax income goes towards your needs. You know, things like your mortgage or rent, groceries, utilities, the essentials. These are the non-negotiables that keep your household running smoothly. Then, 30% goes towards your wants, those fun things like eating out, entertainment, travel. It's important to enjoy life and have some flexibility in your budget for these pleasures. And the last 20%? That's for savings and debt repayment, including paying down your mortgage faster. This portion helps you build a secure financial future. Now, when it comes to your mortgage payment, aim for it to be no more than 30% of your gross monthly income. This ensures you have enough left over for other expenses and savings. That means before taxes are taken out. It's a crucial distinction that can significantly impact your budget. Remember, this includes not just the principal and interest on your loan, but also property taxes, homeowners insurance, and potentially HOA fees. Factor all those in. These additional costs can add up quickly. Don't forget about the down payment. It's a significant upfront cost that can affect your loan terms and monthly payments. Ideally, you want to aim for a 20% down payment. This can make a big difference in your financial stability. Why? Because it not only lowers your monthly payments, but it also helps you avoid private mortgage insurance, also known as PMI, an extra cost you really don't want. PMI can add hundreds to your monthly expenses. But hey, I know saving up 20% can seem like a mountain, especially in this market. It's a challenge many face, but it's not insurmountable. The good news is, there are loan options out there with lower down payment requirements. These can be a lifeline for first-time buyers or those with limited savings. The key takeaway here is to really understand your financial situation. Knowing where you stand financially is the first step to making informed decisions. Use online calculators, talk to a financial advisor if you need to, and figure out what you can comfortably afford each month without feeling house poor. This preparation will set you up for a successful and enjoyable homeownership experience. Your credit score is like your financial GPA. It tells lenders how responsible you are with borrowing money. The higher your score, the better the interest rates you'll qualify for, which translates into saving thousands of dollars over the life of your loan. Seriously, a small difference in your interest rate can mean paying tens of thousands of dollars more over time. So how do you check your credit score? You can get it for free from websites like Credit Karma or Credit Sesame. I'll link those in the description below. Now, if your score isn't where it needs to be, don't panic. There are ways to improve it. Start by paying down your existing debt. Credit card debt especially can really drag down your score. Make sure you're paying all your bills on time, every time. Set up those automatic payments if you need to. Avoid opening new credit cards while you're working on improving your score. Lenders see that as a red flag. And finally, be patient. Building good credit takes time, but it's one of the most important things you can do to set yourself up for success as a homeowner. Alright, we talked about the importance of a down payment. Now, how do you actually save for it? Let's break it down step by step. I know it can seem daunting, but trust me, it's totally doable. You just need a plan and some discipline. Start by setting a realistic savings goal and break it down into smaller, manageable chunks. This makes the process less overwhelming. Instead of focusing on the total amount, think about how much you can realistically save each week or month. This way you can track your progress more easily. Even if it's just $50 a week, that adds up over time. Every little bit counts. Look for areas where you can cut back on spending. Small sacrifices can lead to big savings. Could you eat out one less time a week? Cooking at home can save a lot of money. Maybe cancel that subscription you barely use. Those monthly fees add up. Small changes can make a big difference. Over time, you'll see your savings grow. Consider getting a side hustle. Extra income can accelerate your savings. Whether it's driving for Uber, freelancing, or selling stuff online, that extra income can go straight into your down payment fund. Make your savings automatic. Set up a separate savings account specifically for your down payment and schedule automatic transfers from your checking account each month. This way, you won't even have to think about it. Remember, buying a house is a marathon, not a sprint. Patience is key. It's okay if it takes time to save up for your down payment. The journey is just as important as the destination. The most important thing is to stay consistent and focused on your goal. Keep your eyes on the prize and you'll get there. Chapter 4, Get Pre-Approved for a Mortgage. Getting pre-approved for a mortgage is like getting a golden ticket. It shows sellers that you're serious about buying and that you have the financial backing to support your offer. Plus, it gives you a clear idea of how much house you can actually afford. To get pre-approved, you'll need to provide a lender with some financial documents like your income verification, tax returns, and bank statements. They'll then review your credit history and determine how much they're willing to lend you. Now, don't be afraid to shop around and get quotes from multiple lenders. Interest rates and fees can vary, so it's important to compare and find the best deal for you. Remember, getting pre-approved doesn't mean you're obligated to work with that particular lender. It's just a way to get the ball rolling and show sellers you're a serious buyer. Chapter 5, House Hunting. Alright, this is the fun part. House hunting is an adventure filled with possibilities. House hunting can be exciting, but it can also be overwhelming. With so many options, where do you even start? Start by making a list of your must-haves and nice-to-haves in a home. What are your deal breakers? This will help you narrow down your choices. What are you willing to compromise on? Think about location. Do you prefer the hustle and bustle of the city or the tranquility of the suburbs? Do you want to be close to work, schools, public transportation? Proximity to these can significantly impact your daily life. Consider the size and type of home you need. Are you looking for a cozy apartment or a spacious house? How many bedrooms and bathrooms do you need? Think about your current needs and future plans. Do you want a yard? A large outdoor space can be great for kids and pets. Don't be afraid to think long-term. Your needs might change over the years. Are you planning on starting a family? Extra space might be necessary. Do you work from home and need a dedicated office space? A quiet, comfortable workspace can boost productivity. Once you have a good idea of what you're looking for, start your search online. This can save you a lot of time. Websites like Zillow, Redfin, and Realtor.com are great resources for browsing listings and getting a feel for the market. They offer a wealth of information. When you find a few properties you like, schedule viewings and take your time walking through each one. Don't rush the process. Pay attention to the little details. They can tell you a lot about the condition of the home. Check for any potential red flags like cracks in the walls, leaky faucets, or signs of water damage. These issues can be costly to fix. Remember, this is a huge decision, so take your time, don't rush, and don't be afraid to ask questions. Your perfect home is out there. Chapter 6. Make an offer and negotiate. So you found the perfect home. Now it's time to make an offer. This is where having a skilled real estate agent by your side is crucial. They know the market inside and out and can help you craft a competitive offer while protecting your best interests. Your offer will include the purchase price, your down payment amount, your desired closing date, and any contingencies you want to include. Contingencies are conditions that must be met before the sale can go through. For example, you might include a contingency that says the sale is dependent on a satisfactory home inspection. Once you submit your offer, the seller can either accept it, reject it, or counter it with their own terms. This is where the negotiation process begins. Your agent will work with the seller's agent to reach an agreement that works for both parties. Remember, negotiation is about finding common ground. It's not about trying to win or get the best possible deal at the expense of the other party. Be prepared to walk away if the seller isn't willing to negotiate or if you're not comfortable with their terms. Chapter 7. Home Inspection and Closing. Once your offer has been accepted, it's time for the home inspection. This is a crucial step that you don't want to skip. A professional home inspector will thoroughly examine the property for any potential problems, from structural issues to plumbing and electrical problems. Think of it as a health checkup for the house. You'll receive a detailed report outlining any repairs that need to be made. You can then use this report to negotiate with the seller to either fix the issues before closing or credit you for the cost of repairs. After the inspection, it's time for the final step: closing. This is where you'll sign all the paperwork, finalize your mortgage, and officially become a homeowner. Make sure to review all the documents carefully and ask your agent or attorney if you have any questions. Don't be afraid to speak up if something doesn't look right. Once everything is signed and finalized, you'll receive the keys to your new home. Congratulations, you did it! You're officially a homeowner. Remember that feeling when you first stepped into your dream home? That feeling of excitement, possibility, and pride? That's all yours now. Owning a home is an incredible accomplishment, and it opens up a world of opportunities. You're building equity, creating a space that's uniquely yours, and planting roots in a community. I hope this video has given you the knowledge and confidence to navigate the home buying process with ease. If you enjoyed this video and found it helpful, hit that like button and subscribe to my channel for more tips and advice on finance, real estate, and building a better life. Now go celebrate. You deserve it.